Hi, the very good evening, ladies and gentlemen. Thank you for tuning in for this Tuesday evening webinar of the webinar title Learn How to Profit from IPOs, Dividends and Corporations by our keynote speaker, Lee Guangsen, Principal Investment Specialist from Phillips Security, Associate Trainer with Cybercode, and also SGS Academic Trainer also. In fact, a lot of colleagues from our this Guangzhou, basically he will share with all you later in a short while. Now, do allow me to do a short introduction of the company as well for the benefit of those who get to know Cybercode as well for Guangzhou. So bear with me for about 3 minutes or so. Now, yes, of course, Cybercode, we start off our business since 1996. So one more year, we're stepping over 3 decades, 30 years in business. And we start off with financial investment courses. And then, of course, moving also into corporate level, we're also doing cybersecurity, those share investment or e-source that you heard before. Now, again, in fact, we also, during the COVID period, I think it's more than close to 6 years, Cyberco also garner one of the highest number of the IBF courses also. So in fact, a lot of things you can find out more. I mean, in reference to the investment courses as well, right? Now, of course, particularly for today, learn how to use IPO, dividends, and corporate action by our keynote speaker Guangzhen. That is something that also one of the new topics, and also the topic is very niche that not many trainer or speaker in Singapore do that. So we are quite fortunate to have our principal investment specialist, which is Guangzhen himself, come here to take his precious time, right? As a individual of a reminder himself with this more than 20 years. Now, indeed, Guangzhen himself is, I think, also one of the very few in Philips Security who actually do a lot of things. As invite personally, I think Cybercode will do on those e-source. He also do that as well. So it's something I think that is quite capable of this Guangzhen himself. Now, indeed, IPOs, dividends, and corporate action is also one of the topics that knowledge which Guangzhen himself ambiguate for himself, which a lot of people have benefited. Now, in fact, there are some of you here, you may come across or learn the course also from Guangzhen because used to easily more than 7, 8 years back, we also run the course with Guangzhen. No, so those who go through the course and still coming joining us, thank you very much on behalf of company. Thank you very much in on behalf of our keynote speaker Guangzhen for still joining in and still following us. Right, that is something that we feel fortunate, we feel honored that all of you can join in. Now again, a 2 hour session, 1 hour plus session is a pretty short, but we also want you to have a involvement. You do have question, please post your question in the chat or Q&A, right, pertaining to the topic. Definitely, our keynote speaker, Guangzhen, definitely will provide the reply, right? And also, strongly urge all of you here, stay till the end of session. Myself and Guangzhen will share with you one of the very good course that actually can help you along the way, right? So without much delay, I shall pass the baton to Guangzhen to kickstart the session, right? So over to you, Guangzhen.
Yes, hello everyone. Thanks for attending this webinar. So today, correct, I actually conduct this webinar to actually benefit the public, where I always give talks to them like Invest Fair, Investing Note, and also to Rotary clubs and also to a lot of organization. And I believe that today my webinar will benefit you all because basically I'm teaching things that are simple, easy to understand, and it will most likely work. So I will teach from something that is simple for you all to use to something more complex later on. But I will explain step by step. And you all have any question, correct? You all feel free to actually ask on the spot. And if I have time, I will actually address immediately if I see those questions. So without further ado, correct, I will actually share screen and then I will let you all know what I'm going to cover today. Thank you very much. So today, correct, the gist of this whole webinar, correct, is actually how to profit from the IPO, dividends, and corporate actions. So a lot of people actually, if they have attended my talk before, or basically if you have attended my Invest Fair, or whether is it Investing Note, Share Investors, or whether you all listen to me at the radio, that means 958, 963, or in the newspaper, correct, I actually do a lot of sharing analysis. And why do I actually teach this course, correct? Or even now, I'm just sharing your the basic things that you all can learn from the course is because a lot of people who just attend my webinar like this basically benefit and actually they actually do well in their investment. And I actually teach things correct that actually works. So I'm not going to teach you something that's very complicated, and I do not use a lot of technical analysis or fundamental analysis. How I actually do well is basically I use this method which I actually all along perfect it, which is using the dividend, corporate action, right issue. So this is the normal disclaimer. So basically, I'm not trying to sell any investment product or anything, but the key thing I'm actually trying to teach correct for this whole thing is to teach you all how to do well for investment. A lot of people, if you all start on the correct track, correct, basically you all will do well. So I want you all to do well in your investment. And for a lot of us, correct, we cannot afford to lose already, especially those in the 40, 50, 60s. So when we do investment, we have to make sure that we can actually do well for our retirement. So I'm pretty sure that you're follow my methodology or what I'm teaching now, correct? Not even talking about the course, it will actually work and you all will do well. And I believe that you all will see your wealth slowly accumulate. So today the agenda, correct, is basically I already have share with you all the disclaimer. Next, I will share with you my profile and my credentials. Then I will go into something that's very simple, SGX dividend strategy. Then I will show you what are the indicators for the dividend. Then I will go into the local SGX IPO strategy. Then the recent IPO case study. Then why do we actually can make money from IPO investing? And then I will go into rights trading strategy, which is the more complex one, and how I actually make money always consistently using the rights trading strategy. And then I will give you all the conclusion, takeaway. And also during the whole webinar, if you have any question, feel free to ask anytime on the spot. And then we'll end it with a Q&A session. And then after that, you all can ask even more questions. So one thing about me, correct, is basically I do a lot of sharing. I do a lot of webinar. I do on investing note. I do on YouTube. I'm actually on the 958, 963. I'm actually at one stage the most followed person on investing note, but now I'm at the third because I have no time to actually do more articles. I won a lot of competition in trading, correct, but I really didn't use much of the fundamental or technical analysis. Basically, my method is today what I'm going to teach you all dividend, rights, and also IPO. And I have done well in this. I actually done well in a lot of competition that I actually won the top 5. And one of the more significant one is actually I was ranked second place in the Yahoo Finance Gazillionaire Trading Competition 2010. That was in the early days. So using such simple method, I can actually do well in trading and I can make a lot of money. And also I can no need to make my investment every day I have to worry that I will lose money. So I'm going to teach you all this from this webinar so that you all don't waste your time actually attending my webinar. As of current now, I'm actually ranked number 3 in investing note, which is more for the local shares. I'm also one of the corporate action specialists. I'm also one of the SGX risk ambassador. And basically recently for the SGX revival of the market, I also participated and gave a lot of feedback to SGX, MAS on how to actually revive the market. And that's why you see recently the market has been vibrant. So I spent a lot of effort trying to make sure that we all stay relevant, meaning that we are able to make money from the market. So as you can see already in 2010, I already on the Age magazine on the full page. I always appear on TV. I always appear on a radio appearance on 958, 963. Sometimes Zhao Bao will ask me for analysis, and then I also invest fair speaker, and then I go around giving talks. But these are not the main important things. The main important thing is when you all attend the talk here, right? You all want to benefit from it. And how you're going to benefit, I'm going to speak from my heart and make sure that you all really benefit. And at the end, at the end of the session, correct, you all actually will realize that, hey, actually investing is not so difficult. You all reflect back and actually, you all actually could have made money and avoid all the mistakes. So these are the example on how come I do well. And then I get publicized even by Yahoo, because I actually, among the whole Singapore, when they take part in a certain competition, correct, it's very competitive, but my methodology is so unique, and yet I still can actually win the competition. I did not apply technical analysis. I also didn't apply much fundamental analysis. I just apply based on my understanding. And today I'm going to share with you all the secrets. So now we all look at dividend strategy. A lot of people thinking, dividend, what's so good about dividend? How to invest during dividend? I've always been taught all along using fundamental, using technical analysis. But the reason why I always teach on dividend is because dividend tell 1,000 words, just like a picture. Picture itself correct. You look at it, to different people, it actually mean different thing. So for dividend, correct, after I spent 2 decades trying to analyze on dividend, I improve and improve over the way. Today, I'm just sharing the shortcut and how I use dividend strategy to actually make money. So for SGX dividend strategy, correct, the key point is how are we going to find the trend? How are we going to use the dividend tools inside SGX? And how are we going to adapt based on those dividend direction? A lot of people said, I don't see anything that I can actually make money from dividend. I just buy shares, I collect dividend, that's all. It is not so simple. So dividend itself, you always ask yourself, why does a company actually give dividend? They give dividend, basically, they must be able to make money most of the time. So if they make money, then they can distribute dividend. So today I'm going to share with you all on how you can actually invest in shares using the dividend strategy. And what I said will definitely make sense. So now the key important points is actually this dividend strategy. I have to actually credit to one of my Rotary members, correct, who actually retired at 50 plus. And he was sharing with me about StarHub. He invested in StarHub. At that time, to be honest, correct, about 20 plus years ago, correct, I was still a noob in actually investing. And there was an argument because I was more a fundamental person because of the fact that I look at data. I was graduate from econs. Then I was telling him, actually, StarHub cannot invest one. The net asset is only 0.01. How to buy StarHub? I will buy other counters. I will buy those counters like the banks or those in-play counters or what. I wouldn't buy StarHub because what happens if StarHub actually fail, correct? And then if I want to liquidate the company, I only get 0.01 cent back. But I'm wrong. So over the years, correct, during the 2000s, correct, my this good friend of mine, correct, actually invested in StarHub. And then when he invested in StarHub, correct, I realized that the price go up and he keep collecting the dividend and he retired early. And then I was trying to analyze the strategy and I found the winning formula. Today I'm sharing with you all. So the key winning formula about whether you want to invest in StarHub is number one. When we want to invest in anything, correct, we always ask ourselves, do we use the product and services? At that point of time, to be honest, correct, we do use how to say, we do use the StarHub product. For instance, what are the things that we use? You remember last time we watched football, cable TV. I also use the mobile phone and also subscribe to the line. So if you got use the product and services, correct, you should buy the shares. And if you do not use the product and services, you do not buy the shares. So sometimes, correct, after I master this, correct, I just give you one classic example. We don't talk about Singapore shares. So during the COVID, what do we use most? Just like now, all of us are on Zoom. So during COVID, I bought Zoom under $100. But when I start to use more and more of Zoom, whether is it for Rotary or whether I conduct seminar or engage my client, Zoom from $100 went to 600 plus. But to be honest, correct, I don't want to wacko you all. I didn't sell at 600 plus. It's when the time I start to use less of Zoom, correct, then I started to sell the shares. So I sold at 350. So basically, I made 3 plus time of Zoom. So imagine I put maybe 10,000, I could have sold 35,000. So I make 25,000 within a short period of time. Same thing for StarHub. One of the key thing whether we buy into StarHub, correct, is basically we ask yourself, do we use the product and services? If we use the product and services, is it good or not? If it's good, we'll buy into StarHub. But whether we buy a lot into StarHub is also depend on one thing. That's why I want to emphasize today is on dividend. So dividend, we know there are a lot of shares. What shares do you buy under the dividend strategy? You always first ask yourself this question. Do you use the product and services? So today, recently, I always tell people in Singapore we have three banks, but I use the most actually is DBS Bank. So I buy into DBS. And you ask yourself, the second question is the dividend increasing? Over years, correct? Over the years, you realize that DBS dividend keep increasing over time. So if you bought DBS and you invest in you actually put your money in DBS, buy investment product from DBS, you will also know that the dividend also increase. So when the dividend increase and also you realize that DBS is a share that you believe in, you have make money. So Starhub is a very good classic example where when the dividend increase in the early part of the years, correct, it actually give from 3 cents to 5 cents. So when it increased from 3 to 5 cents, the person who taught me, correct, saw his wealth increase from $2 to $4. And when his wealth increased $2 for $4, can you imagine the dividend went to 5 cents? 5 cents means every quarter he received 5 cent dividend, correct? He got cash flow. So 1 year he received how much? 20 cents. So 1 year received 20 cents is close to, even he buy at $2, he got 10% dividend. So when is the period where you start to actually sell out Starhub? When the dividends start to decrease. So these are things that we have to understand. So I can give you all a lot of example. We have to understand what are the dividend trends. So when the first basic that I'm teaching you all is if the company dividends start to increase, we actually must buy the counter. If the dividends start to decrease, it's time to sell the counter. Why is this so? Because I analyze and understand one basic concept. If the company is doing well, obviously it take out from the profit and increase the dividend payout. Assuming the company itself is not doing well, or there are signs of it fact that the company is starting not to do well, they will start to decrease the dividend. So when do I actually invest in actually Starhub? I invest when I at that time subscribe for their cable TV, I have their handphone, I have mobile phone and everything. So when is the time that actually I sell out Starhub? When TBG came in, and when TBG came in, correct, you all can remember that they actually give up to 2 lines free for 1 to 2 years. So if that happen, correct, I actually cancel Starhub line or reduce Starhub line and actually switch to TPG because the data mobile, correct, they give me, correct, is for free. So why would I actually pay for Starhub line? You get what I'm trying to say or not? Number two, when I start to actually stream those football online, I don't watch the Starhub streaming. Then what happened is basically Starhub price also will start to fall because you know their revenue will come down, their profit will come down. So dividend itself, as I mentioned, actually tells 1,000 words. Am I right to say that or not? So if dividends start to decrease, it means that the company is starting not to do well. So I just give you one thing that I share with a lot of people is I use SPH as an example. When I started to become a stockbroker or a remisier, my most favorite stock, to be honest, is always Singapore Press Holding SPH. Because decades earlier on, correct, all the people who taught me tell me that SPH is a very good share. Every year you will get 5% dividend. Very, very safe. Tony Tan has shares in it. Basically, you can't fail. True enough. I also thought so. I thought you just keep SPH, you will forever do well. And not forgetting that I see from the past got newspaper. In the future, I also believe always got newspaper and people need to advertise. And I believe that newspaper price will keep going higher and higher. Advertisement will also go higher and higher. But I am wrong. So over time, correct, I actually, when I started to invest, correct, I actually bought into SPH. But what happened is by 2015, correct, I don't read newspaper already. This is quite a sad thing. Then you ask yourself, you also start not to go and subscribe to newspaper, or you don't actually go and for some of y'all doing business, correct? You also don't advertise on those newspaper in Singapore. So when you don't advertise the in the newspaper in Singapore, obviously SPH revenue and profit will drop. We look at, remember last time, why is it SPH such a popular stocks? If you are a property agent, you all remember that you all need to advertise property, you all definitely need to use the SPH. Am I right to say that or not? Then if you see that when every time when you want to go overseas, you want to go to travel, you want to go to those travel fair, what is the main thing that you all need to see? You all need to flip the newspaper, you all need to go and check and everything, and you see the newspaper is always very, very thick. But what happened? Trend change. Not that time, a lot of people actually go to the internet to actually find advertisement, read on news. So people start to not use SPH. Am I right to say that or not? They use less and less of SPH. So when they use less and less of SPH, SPH dividends start to drop. So when SPH dividends start to drop, what must you do? Basically, I sold the shares. So SPH I sold at the high end of the 3 plus. I didn't manage to sell at 4 plus, but if I didn't sell, SPH actually dropped to $1 plus. You all can remember. So dividend actually tell 1,000 word. So as of now, we know that DBS itself correct is doing well, and we know the dividend is increasing. That's why we buy DBS. But one fine day, what happened if DBS actually give less and less dividend or they don't do well? What are the possibility that DBS may not do well? When people start to use more digital bank, they start to use maybe Mari Bank, all these blah blah blah, and you realize that DBS profits start to actually come down. That is the time that we actually don't invest in DBS Bank. But can it happen so soon? Answer is no. As of now, the trend is DBS dividend keep increasing. I give you another classic example that I always share with people is basically on ComfortDelGro. Last time I always take taxi because I don't have a car. So when I always take taxi, realize that ComfortDelGro go up to 2 plus, 3 plus. But when Grab and Uber came, I take more Grab and Uber. I totally don't take ComfortDelGro because they are cheaper. There's more promo code. At the same time, what happened to ComfortDelGro share price? It also came down. That is the reason when you don't use the product and services or you use less of the product and services, you must sell the shares. And also when you look at it correct, the dividend also start to fall. So when a company start not to do well, basically the profit will start to fall and it will be reflected in the dividend. And that is why that is the time you actually, what happened? You actually sell the shares. As long as the dividends keep on increasing, you should actually buy the shares. But if the dividends start to decrease, you should sell the shares. And you must be backed up by a simple fundamental, which I'm sharing with you all. Basically, you all must use the product and services, or you all must believe in the company itself. So if you do not believe and you don't use the product and services, my advice to you all should not try to invest. I give you an example. During by early days, correct, got people say, hey, Ezion is a very good company, Ezira is a very good company, Swiber is a very good company, they make a lot of money. But my main question I want to ask you all when you all invest in companies, do you all know the product and services? You all just read about it. Why don't you all keep your investing philosophy simple? At the point of time, like myself, I actually invest in the US shares also. So I'm a fan of what? I'm a fan of Nokia. So when I'm a fan of Nokia, when I use Nokia, I basically buy into Nokia shares. But in 2010, I switched to example, Apple. So the moment I switch to Apple, what should I do? Sell Nokia and buy Apple, and Apple share price keep going higher. So even the recent case, correct? Why is it that Apple went up and I add on to Apple? Is because I add on to iPhone 17 Pro Max, which I bought for my wife. So these are so simple things in life that if you all have observed correct, you all would actually make money. Am I right to say that or not? And then you use the dividend to back it. Because dividend itself, actually, as I mentioned earlier on at the beginning, it tells 1,000 word. So I give another classic example. We talk about different countries. So just now I talk US, I talk about Singapore. I give you all another classic example in Hong Kong. I actually don't use WeChat. But the day I use WeChat, what did I do? Because I need to communicate with some of my clients who are from Hong Kong, China. Basically I went to buy Tencent. And from then, Tencent actually boom, and the share price keep going higher. Till now, I'm still using WeChat. So basically, Tencent shares are still doing okay, and the dividend is okay. So these are things that we need to understand. Now, there is a very, very classic example that a lot of people like to ask me is basically they want to know is what happened if a company suddenly like Hua Hong, they suddenly give a one-off special dividend. This special dividend suddenly is like all their cash or suddenly they sell off their asset and they give one off. Can you suddenly say that because this year the company actually increased the dividend, I will buy the shares? Answer is no. One-off dividend, one-off, and then you see suddenly they give the dividend, it cannot be counted as a dividend strategy. Last year, maybe they give 1 cent or never give dividend. Suddenly they sell asset and then they suddenly the dividend give 10 cent, 20 cent. This is a one-off dividend. We cannot count it as a dividend strategy. And I wouldn't just because it give a one-off dividend, I go and buy. That is why a lot of people, if you look back and trace back and you do a backtrack, you go and buy into Hua Hong and you give a one-off special dividend. At the end of the day, you get burned. So what is the moral of the story? The moral of the story is dividend strategy is meant for those consistently giving consistent dividend year in, year out. Those are the companies that I will invest. Number two, do I actually use the product and services or not? If I do use the product and services and I believe in it, I will invest in it. Just like I asked myself, today I just saw another share. I just regret myself I didn't buy. I always love to eat Old Chunky chicken wing and also fishball. But because I got so many of these simple shares that I buy, I didn't buy into Old Chunky. But now I look back, correct? If I eat, I always keep buying Old Chunky. Even the share price increased. I remember the fishball was 180, the giant fishball. Then it went to $2, it went to 220, it went to 280. I still buying. So whenever I pop by Old Chunky store, especially in the Capital Mall, I will buy. So by right, I should buy into Old Chunky, but I didn't. I give another very classic example. Recently, you know Sheng share price keep going up. So I organize even to for my club to actually visit the Sheng show. I love Sheng and I always love to see the 百倍,千倍,千倍. So I always love it and I always be hope that I'll be the lucky one to win the lucky draw, something like that. So I will be very have a higher tendency to actually buy from Sheng than those mini-mart or what. Because number one, I heard that Sheng has good reputation. Number two, they actually have lucky draw. Number three itself, correct, at most of the neighborhood, I heard that they have some special where every time I park during the Sunday, basically have free parking. They are always having very good location where if you go for parking, especially on Sunday, free parking. So you can see they are increasing their dividend and also you can see they have increased the number of outlets as well. So obviously you will invest in Sheng Siong. So now we think back, correct? I'm sharing with you all, doesn't it makes investing very simpler? But a lot of people would like to go and learn and invest something that they heard of it. But this is actually very dangerous because it is something that we invest in a company that we don't understand or we don't use the product and services. Then there is a very high chance that you may have invested in a company like example Ezira, Ezion that suddenly disappeared. So we actually invest in a company, correct? We need to believe in the company. We need to use the product and services. And then the important gist is using the dividend itself, correct? We make it simpler to see if the company is do well, whether to buy or whether to cut. So after I actually look at it, right, basically it's very, very straightforward. If I buy the company, correct, basically I use the product and services. Number two, I believe in the company because from tens of thousands of company, I really scrutinize. I only use only a few basic product and services. Then I look at the dividend. If the dividend is increasing, I will buy into the company. If the dividend is decreasing, basically I will just sell the company. It means something is wrong. Then there is another question that a lot of people would like to ask. What happened if the dividend itself, correct, suddenly decrease? Like last year, it has been going up. Then suddenly this year, it suddenly go down. Maybe due to COVID or due to a certain point. Then I will sell the shares first. If the dividend start to increase back, then I buy back. I rather buy high than to take risks. You get what I'm trying to say or not? So these are proven strategy to have your cut loss, take profit, stop loss point. But assuming if the company continue to do well, the dividend keep rising, usually the share price will also continue to rise. Correct? So today I'm sharing something that I'm speaking from my heart and basically you all think back, right? Really by right, if you all invest in such a simple method, right, you all already shouldn't even lose. Am I right to say that or not? So we look at the trend. You see, when the dividends start to increase, correct, we can see the share price also increase over the years. Correct. But when you go to the peak of $4 plus, there are things that actually happen, and actually by the dividend itself, it will actually tell you that the company is in trouble. They are making less, they distribute less profit. So what happened is dividend itself actually let you go and sell the shares before it drop even further. I won't say that you'll be able to sell at this high, but I'm pretty sure that you may be able to sell at all this level. Even you don't sell at this level, even you sell at $3 also can. So at every point the dividend drop, the share price also drop. So when will you be able to buy Starhub again? My view is when the dividends start to increase, or you have positive news saying that there's a chance that the company is going to do well. So that is the reason why today I spend my time and effort to explain to you all how to use a strategy, dividend strategy to actually invest well, and also make sure that in the long run you all don't lose money. As my philosophy is basically very simple. Money is very hard to make, very easy to lose. We really cannot afford to lose, especially when we are getting older with a lot of health issue and everything. So we have to have proven method, and that's why I spend my effort to share with you all so that you all can not make mistake and lose money. So we assuming that suddenly you buy into a dividend strategy and the dividend is increasing like DBS, the company is good. Then suddenly there's a stock market crash. Why dividend strategy is something that I also believe in is because of the fact that if the shares suddenly tumble due to macro issue, you do something wrongly, and then you get stuck with the shares, at least you have dividend to fall back. So I have some of my clients basically in 1996, they went to dabble in properties and they had maybe 30, 40 over properties, 60 over million, and then borrow heavily from the bank. Then suddenly the property crash. And when the property crash, correct, I realized that they actually tong. And they during the period from 1996 until 2007, the property didn't go back to the new high. But over the years, what did they collect? They collect rental. Rental is just like dividend. If it's a good counter or like property is good thing, correct, basically it has to go back to new high due to inflation. So in 2007, correct, property went back high, and then from then on it just keep going higher and higher. Same for shares. Assuming you go and buy DBS at the highest, then suddenly the market crash. But one fine day, it may go higher, just like you go and buy into Sheng or all this. If the company is good, correct, you just buy and fall back with the dividend. Just don't look back. You can't go that wrong. Unless you are trying to tell me that the share that invest, that whole economy is collapse and forever you won't rebound. If you have faith in Singapore, then basically Singapore itself, the shares can invest. So you look at DBS, as I just now already emphasized to you all, over the years, correct, DBS, you can see the dividend just increase year in, year out. You see from 33, 36, you see, they just keep increasing. So as it increase, what should you do? You should just buy the shares. It's that simple. And then you ask yourself this simple question. Do you actually park your money in DBS? Also, do you buy when you go to the platform, do you use the unit trust to buy shares? Do you do investment? Or if you go to the private banker, you are considered a bit high net worth. Do you go into the private banking? And then do you believe in their recommendation, everything? Yes. And why is it that DBS, correct? You want to add some fundamental is consider the share that we should always buy. So let me explain. I'm sharing y'all. If y'all want to buy into a certain sector, you should always buy into the strongest one. Why do I say that? If you buy into, like example, UOB, you look at UOB itself, it is the weakest among the three UOB bank. If you see you see cheap, you bottom fish, compared to the same period where you buy UOB and DBS, you basically, I remember I got one client buy 1,000 of UOB and 1,000 of DBS. He bought DBS at $42, he bought UOB at $35 just recently. Look at DBS now, $55. You look at the UOB, even drop below. So whenever we buy, we always buy the one with the strongest I'm doing in the sector which is the strongest. Because when you have the stronger shares, basically when now at DBS at 50 plus, $55 plus, everybody is a winner. Why? Because at new high, everybody don't lose on DBS. So it's very, if the hot money just come in and they buy into DBS, nobody lose money. Am I right to say that or not? Because it's at the highest point, what? So it's more easier to push. But recently, you look at UOB, result no good. So what happens if people buy into UOB? Then they bought it cheap. They want to bargain hunt. So if we bow a bit, right, people who want to make a bit will sell. So it has a lot more resistance. So like today, the two banks go up, DBS go up, UOB go up. But look at UOB, you go up less than DBS. Then a lot of people will be telling me the same question. DBS itself is so high already. The price to book is so high already. Why would I buy it? I would want to buy UOB where it's cheaper. In shares, we always look at strength. If the sector is doing well, we buy into the counter. Just like if I want to go to US, I want to buy example chips. Which one I choose? I choose Nvidia because Nvidia is the strongest in that sector. You all understand the logic? So looking at it correct, DBS itself is good also because of one key things that if you all want to add fundamental, now after learning the basic of the dividend strategy, if you are expert in fundamental analysis or macro analysis or even technical analysis, then you add on to it to complement my dividend strategy. Now, there's another question that always people ask me is, why is it that DBS do better than example like UOB? It is because DBS is backed by Temasek. So if there's any deal, corporate action, merger acquisition, right issue like SIA, all this, they will get DBS to do it. Or even Citrum, let's make it they want to borrow money or they want to issue bonds, they were actually more keen to look for DBS because Temasek own DBS and basically if there's any deals or anything that is merger acquisition, they will give to DBS. So these are things that you have to look at. And also, you want to add on fundamental. Why is it UOB we cannot invest? Is because of the fact that you look at the region. UOB emphasize on or expanding in the region like Vietnam, Indonesia, and Thailand. There are political issues, or if you know Vietnam, the property crash, and then you also realize that recently Indonesia got riot and not doing well. Obviously, UOB will not do as well. But if you look at DBS itself, correct, that time they got an Indian CEO. Basically, they expand India. India did well. They also do well. So this is all dependent. So the last question a lot of people ask me, how about OCBC? OCBC itself is considered the world's strongest bank. It is very conservative and it's very safe. So if you don't want risk and then like you realize that DBS is very high, then maybe you can consider buying the OCBC. But I will always buy the strongest or the next strongest. I wouldn't go and buy the weakest, even though it's cheap. So a lot of people always say, I want to kill durian. But every time you ask yourself, when you buy something that is at the high and it drop down, you will usually get hurt. You go and ask yourself, if I drop a knife from the knife story and you go and hold on to the knife, usually the blade will cut through you. So usually we said we do not catch a falling knife because a falling knife is very, very painful to catch. And if you catch a falling knife, usually you end up bleeding. But end of the day, if you wrap it and then when your wound actually recover, what will happen to the share price? The share price may recover if the company is still good like UOB, but it will recover at a slower pace. That means the up pace, it will be slower than the counter that is stronger like DBS Bank. Okay, so in conclusion, I'm recommending example, we all got use the three banks. And then you also ask yourself, look at the dividend. Is the dividend increasing? If the dividend is increasing consistently, we will buy into that bank. And more importantly, today I add on another thing into the dividend strategy. We always buy the strongest within the sector. So I'm trying to teach you all simple methodology. If you all have just followed this methodology and you all look back 10, 20, 30 years ago, seriously, you all should be doing okay for shares. You all wouldn't have been burned left, right, center. What should we not do that I actually came out with this method is because I saw for my own eyes, all my relative, my mom, all this, last time like to get dabble in shares. They actually like to hear tips. They hear from friends. They buy counter that they don't understand. And when the share price drop, they keep it until doomsday. Just like today, MM2. What happened to MM2? Basically, it gets suspended. So why is it that we don't, when must we sell MM2? I'm not saying that MM2 is a very, very lousy counter. MM2, you all know, correct, actually took over the Cathay Cinema. I Earlier days where I'm young, I also like to watch cinema. I like to go to cinema. I like to watch film and everything. But recent days, you ask yourself this simple question: do you all still go cinema? If you all go cinema, it's due to maybe fundraising, charity movie, marathon. Most of you all actually subscribe to watching online streaming or Netflix. So if you all do that, right, would you all actually go to the cinema? If you all don't go to the cinema yourself, then you should sell the shares, already. That is the basic methodology. And if you see that they don't even pay dividend, the share you can forget about it. Am I right to say that or not? You won't reach to a stage, correct, where today the share is suspended. So these are so simple things that if you have invested, like example, MM2, you could have avoided it. You should have really cut loss. The day you go to cinema less, it doesn't pay dividend, you should just cut it. You look at DBS, if you look at the increasing trend over the years, the dividend do well. So when it fall, basically you will still rebound, go higher because dividend, as I mentioned, tells 1,000 words. If you all just follow on a simple dividend strategy, basically you all wouldn't actually lose money. You all think back, right? That is why I said that my method actually do work. But a lot of people don't think, does it work for overseas market, whether is it Hong Kong or whether is it US? The answer is yes. Your think back, did I share for Hong Kong side? Did I share for US side? Zoom, Nvidia, or example, I just talk about. Now the recent trend is actually AI. So AI during the recent, I think this year or late last year, I went to buy into Microsoft or Alphabet. Why do I buy into it? Because I start to learn how to use ChatGPT or Gemini. I start to adopt AI. So when I adopt AI, what should I do? The moment I adopt, very simple, I find it good, correct? I never cancel the subscription. I buy into Microsoft. And then I buy into Alphabet. Alphabet, I think I bought at 90 plus. Look at the price now. Then you look at Microsoft, I think I bought at 290 something. Correct? Am I right to say that or not? So like what counters will I avoid? I know a lot of you are fans of Tesla, but I never buy Tesla car. I don't love electric car, and I don't own a Tesla car. So if I don't own a Tesla car, you all can tell me how good Tesla is. Tesla keep going high, and then Tesla is at high. But the problem is I won't invest. I'm not saying that my method, correct, will be able to get all the good shares and then you'll be able to buy. But it's just that I will not buy into using my methodology of the dividend. I wouldn't buy into Tesla because in the first place I don't use it, I don't believe in it, so I just don't use it. There are so many shares that I point to you. Do I need to buy into Tesla? No. If I bought into Alphabet at 90 plus, I also make until 250. Why do I need to go and buy into shares that I don't understand? Am I right to say that or not? If I don't believe in it, I just don't invest. I'm not trying to condemn Tesla because as long as you make money, it's a good share. Am I right to say that or not? That's why they say Mao Zedong say, as long as the cat can catch a mouse, basically whether it's a black cat or white cat, you basically is a good cat. Same thing, as long as you can make money, whatever method, including whether you use dividend strategy, you use technical analysis, you use fundamental analysis, or you basically can pay tikam, also I will say it's a good method. But why am I sharing this with you all? Basically, I have already shown that my method is proven. You all can backtest my method, which I share with you all today. Yours will realize that true enough, what I share, you all do take back to beginning of investment, or you're going to start investing maybe 1 year ago, you realize that if you just do what I teach just only, you will make money. Am I right to say that or not? So you look at what are the counters to do it. So today example, I actually this slide I did earlier. So I didn't want actually I want to mock at MM2, but I never expect today it actually got suspended. So I just want to say that Singapore Airlines, actually the day I buy Singapore Airlines is when COVID, after during COVID, we cannot fly. So Singapore Airlines, the price keep coming down, what logic, right? But the moment the borders we open, we keep on flying, what is the first counter we need to buy? We need to buy SIA. So SIA, whether to accumulate more or not, what do we look at? Look at dividend. Because it keep doing well, record profit, the dividend also increase. Same for DBS. If DBS, I always use the product and services, I will buy into DBS. Now, look at SPH itself. I really love SPH very much. I just tell you, even now, even though it's no longer, it got delisted, even though it's no longer trend, people don't read the newspaper. I also don't subscribe newspaper, I just be honest. But from young, I always love the newspaper. I always flip the newspaper. I read the newspaper. I grew up with the newspaper. SPH itself also has a lot of advertisement. Every time go to the back page, and then I see my mom last time is a housing agent, all this. He will every time advertise. He has a housing agency. So I love SPH, and I told myself SPH cannot die. And for share investment, there's something that I want to teach you all is that you cannot be stubborn. Stubborn meaning that you cannot think that a share, correct, will always be good. Technology can change it. Just like internet came about, people start not to read the newspaper. People start to what happened? They start to go online. People no longer advertise on the newspaper. They use the property guru to advertise all their properties. So things can be replaced, especially by tech. Remember that last time I always tell myself from young, you will definitely take taxi. How can taxi be gone? ComfortDelGro will be a good share. But I never expect I will use technology to go and take Uber and Grab. And still, most of the time I take Uber and Grab. I don't take Comfort. And recently Comfort up is because they have improved the app. They give a more promotion, and I start to switch from Grab to ComfortDelGro. So ComfortDelGro share price also go up. I don't know whether is it because my trend, but you always believe in yourself because you always believe that you are the norm. So if you are the norm, you start to use more of the product and services. I believe all of you also uses more of these product and services. So the share price has to go up. M1, the same thing. Why M1 not doing well? Because I use less and less of M1. Then we look at things like example, Sheng Siong, as I mentioned, we really use more Sheng Siong, we go more Sheng Siong to buy, you spend more at Sheng Siong, and then you see they open more and more outlet, obviously it's doing well. So another way to actually invest using the dividend strategy is look at the number of outlets the company is expanding. And if they're expanding and the dividend increasing means they are doing well. It doesn't mean one thing that you all must take note. If the company itself expand like Haidilao, but the profit keep coming down, that is a no. Or dividend will show that it doesn't pay dividend or dividend start to come down, cannot invest. So expansion, it is not a criteria to actually invest in a company. It is only if the company expand, do well, profit increase, dividend increase, then we invest in it. Sheng Siong is a classic example. Singtel. Why is it that I buy into Singtel? Because I increase the line, is more stable. And as Singtel do well, correct, Singtel share also go up. That is why Singtel is one of the most is a darling for a lot of people because of the fact that it gives stable dividend and also the fact that Singtel a lot of people use. So if the day you use less of Singtel and you find the line not stable, you want to condemn Singtel, go ahead, just sell Singtel. If you really don't like Singtel, just sell Singtel. So it's so simple. Again, a lot of people will have this perception. Some people say Singtel really damn lousy lah. The line damn lousy, the company damn lousy. Then sell the share. It's okay. Even though the share price go up, maybe your perception differ from other people. Other people like me still find it okay. So the share price continue to go up. Okay? So there's no right or wrong. Just like beauty is in the eye of the beholder, just like a valuation for property. So a property itself, people can value it differently. Some people like it, some people don't like it. Same for shares. But if the share price go up and you don't like it, you cannot say that your choice or your taste is wrong. It's just that more people actually like it. That's all. Now, we use another classic example called Cot Life. Cot Life basically, originally, I love this counter is because when my wife give birth, basically Cot Life want to sell the Cot Bank and then I want to be safe, say that in future, if anything happen to my kid, they need something to back up. I need the cord and everything, blah, 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 blah. So I will definitely subscribe to it. Now, again, it give if you're doing well, you will give stable dividend and everything. But when will I sell the shares or anything? When the dividend start, and also when the company has issue with it. I give you an example when you will have issue. For instance, you say that they didn't keep the cord properly, then they have issue. All these cord all cannot use. All these. The moment you see this negative news, you can cut the shares as well. No need to wait until the dividend come down. It's logic. The moment you hear this negative news, who will dare to use Code Life or the demand will decrease or you have to do compensation. So sometimes you no need to wait until the dividend happen. The moment you see the news, you just have to cut it. You don't wait until the dividend start to drop, then you cut. But when you invest in it, it could be due to dividend. But you also have to be very careful, meaning that if there's any negative news that you see, example, you know Sembcorp Marine now known as Citrum. The moment they got Brazil fine, what must you do? The moment you see such negative news, you just sell it. And when they start to improve, that means the legal case start to no more, then you just buy into it. Now, I ask yourself, a lot of people say, should I buy into counter like Mary Chia? Answer is no. Because I don't use Mary Chia, I don't believe in it. And even there are a lot of facial package, I heard that they go to others, I won't go. So the share price don't do well. So these are very, very simple investing strategy that you all should use, and always use dividend to back it. Usually, if let's make it, you got use the product and services like I go to Dongwu and eat, but the dividend sucks or they don't pay dividend, or basically I will not invest in the company. So it's not so straightforward that I use the product and services, I will actually buy the company. So it is through the dividend that it actually tells 1,000 words. Am I right to say that or not? And that's why these are the basic strategy that I'm sharing with you all. That if you all think back, right, it will actually work. So now thinking back all this, correct, you have any question also, you all can feel free to ask me on all this strategy just on the dividend itself. So before I go to the next topic, remember if you have any question, just feel free to post. But I believe just on the first part itself, even you all don't listen to the second and third part, correct, you all basically follow my methodology and understanding. It's so simple, you all will do well. There are some people why I'm teaching the second corporate action method, correct, which is basically the IPO strategy, is because some people love to make some money. So for instance, like recently, all the IPO and application, every IPO, after I know my IPO strategy, I make $300, $200. I don't need a lot of money. I only use few $1,000. I make few hundred or tens of dollars. But I slowly accumulate my wealth. And IPO strategy is a method is that if this IPO is a good IPO, I will apply. And if it's not a good IPO, I will not apply. So this is the reason why, correct, I actually teach on this IPO strategy. So I will be teaching now on this local SGX IPO strategy is when should you invest into an IPO? How to increase your allocation? What are the warning signs that to skip an IPO? Why flipping is possible but not always profitable? So a lot of these things happen. So I am the master of the IPO. Recently, at the previous talk, if you all had attended, I said very carefully to the participant, if I give him that I actually will apply for the Collywood IPO, and I'm very sure that you open above water. But I also emphasize one point. For my IPO strategy, I sell at opening. I don't take risks. So why is it that you need to learn all these, correct, that I'm teaching, correct? It's basically a lot of people don't understand. They thought Hollywood is a good IPO. Apply open above water means you can hold it. Today, I think it dropped to 57 half. Just now somebody telling me. But I really never look back because the moment I apply, I got 9,000 share. I sold at 61 half. I made about close to $200. Then I just close shop. Can? So when do we invest in IPO? We invest in IPO, correct, when the market is in favor market conditions. So this is the first thing that I want to teach you. Like last year, 2024, you hear our market also no good. Do you even bother about investing in IPO? Answer is no. It's that straightforward. That's why a lot of people must see what is the wind. Now the wind itself is a bullish market. Why is the market bullish? Because interest rate keep falling. It's forcing the retail to buy into equities. So when the IPO market is in the is very, very favorable, meaning the wind is very positive, then it's good to apply for IPO. But we need to check clear. That means you have to see the past few IPO. If you apply and then does it open above water or not? So these are the trend that tell you that if it's a bull market, just like last year Malaysia, you apply what IPO, get what IPO, you win. But in Singapore, you apply what IPO, you get what IPO, you die. Not die very, is die very badly. Meaning that you put in 10,000, within less than 1 week, you lose more than 5,000. That is why we need to learn this IPO strategy. And this IPO strategy, if you learn correct, let you make some of this money correct as pocket money. So wherever there's a good IPO, you apply, maybe you can make tens of dollars, few $100, few sometimes you can make few $1,000. It's luck. So you also need to know how to apply for the IPO, what is your optimal allocation, and then you need to learn how to do it. So a lot of people, I will be teaching how you will do it. And there are warning signs to skip. So what are the warning signs to skip? You don't go and apply rubbish IPO that you don't even understand and you don't believe in it. And then you believe that it's lack of transparency. Basically, market demand is very weak. IPO market is generally bearish. People apply, lose money. So these are the warning signs that you shouldn't do any IPO. Now, we always do flipping. That means we always invest in IPO that we know that you're going to open above water. But how we all know? So there are certain things that you need to learn to actually apply for this IPO. But you need to know that if you don't know how to apply, it carry risk. Just like example, I have a client or friend basically say Hollywood is a good IPO. I said so. I said that you open above water. So he went to buy at 60 half, 60 cents, 59 half, thinking that you will sure go above IPO. I never say such thing. For me, I already said for the IPO strategy, if I apply, I get it, I flip opening, I usually make money. And then it has been a suspicion that actually I missed the IPO. Why? Because my accuracy for the past 20 years, correct, is basically only the sure win IPO I apply. Not sure win, I don't apply. So I have a certain methodology. So example, I would dare to say from my heart is that although NTDDC open at 102, and got the market got buy, I didn't apply. I thought it will just open slightly above water or even below water. So I skipped this IPO totally. So for me, I have a methodology. It doesn't mean that this IPO itself got Temasek buying it. It basically is a REIT and also that it is very big and it has good fundamental. I will definitely apply. There are things that I will look at to actually determine whether I apply or not. So like Hollywood itself, I did apply. Centurion REIT, I did apply. Astral Bond, I did apply. And all these actually I make consistently like 200, 300. I don't make a lot of money and I don't need a lot of money to actually make money from shares. You got how much, you just make accordingly. That is the key thing that you all need to know. Can? So look at this IPO. Would you make money if you apply for all? Answer is very straightforward. Obviously, no lah. Why? Because if you apply the wrong IPO, correct, it basically can actually open below water. So I would like to say that Astra I did apply, the Infotech I did apply and I flipped and I sold at I think 96 cents and then I think after that it dropped below 88 cents. And then Lump Sum Creation I also applied. It went almost double, but I didn't sell high. I sold at 30 plus cents because and I said I'm very, very honest. I sell at opening, I flip, I close shop. I also made from design format, but basically design format, basically I didn't get it, but I know you open above water and may go up. So I bought 100,000 shares at 27 cents and then I sold at 28 cents. And I totally didn't apply NTDDC REIT. And the main reason why I didn't apply for NTDDC REIT is because we always look at the past precedent. All the foreign REIT, all actually, we said never do well. What do I mean by never do well? Because of the fact that all the foreign REITs at the end of the day, all below water, or at the end of the day, they are very, very low in price. So the moment I see foreign REIT, and then in foreign currency, all those, I basically will avoid all these counters because they have higher exposure. Because we are not able to control overseas property market. So for anything that is overseas, correct, tend to have higher risk and they must give a discount. So for me, basically, as I explained so much, I would like to say that if you apply all the IPO, basically without discrimination, you overall most likely will lose money because the IPO market really varies in the quality and timing. So some offerings are overvalued. You apply wrongly, you open like example, Hollywood maybe is overvalued in terms of fundamental. You open high, but after that it come down. So we must be very careful when we apply, correct. We have to look at the market. Because if the market is bearish or the company lacks strong fundamental, like design format, all this correct, you cannot hold. The fundamental is not good. You apply, you will actually get blue black, meaning that you'll lose heavy. Successful IPO investing require careful selection. So you have to look at the market sentiment, the company financial, you need to look at the allocation strategy rather than applying to every IPO. Okay, so it's very straightforward, right? Let's go to the next one. So we look at the case study. In 2024, it is a bearish IPO market. So why was it a very bearish IPO market? It's because it was weak due to economic uncertainty and low investors' confidence. So many companies itself, correct, actually postpone or cancel their IPO plans. You know why? Because I have companies that wanted to list. They are Singapore companies and they are my close friends. They rather list in Malaysia than to list in Singapore. And when all of them list in Malaysia, the share price actually now they double or triple. If they have listed in Singapore, I can only tell you is below water and they wouldn't do well. And I dare to say, correct, it's a mistake if they have listed in Singapore last year because Singapore market is bearish. So you can, this is a bearish market, you cannot apply IPO. If you apply IPO, it's what we call mati, sure die one. Then if you have applied IPO in Malaysia market, what happens, whether you do the supermarket one or any of the counters, most likely if you get it, you'll make money. Why is this so that our market is very bad? Because the demand is no good, sentiment is no good. So even company want to list, SGX or any of them will actually tell them that you list in Singapore, your P ratio is only 4. You cannot get a good price. So if any company itself cannot get a good price for their listing, why should they list? So in fact, we have a lot of companies actually list in overseas like Malaysia. The better one will list in US. So we have a company like Oh My Home basically went to US to go and list. Okay, so these are things that you have to take note. So the market environment will cause heavy losses for people who enter the IPO with that well strategic timing. Now is IPO hot market. If you enter the market at this period, correct, you will actually do well. Can? So these are things that you have to look at it. Then this case highlight the importance of um, recognizing IPO during downturn. Okay, so let me see. I have some questions that actually somebody highlighted to me, so I will address this question first before I carry on. In some cases, the dividend, which was increasing yearly, but for 1 to 2 years, the dividend started to drop. Correct. So how many percent of dividend increase can we expect in general if the company fundamental is good? Usually, if the dividends start to drop, basically, I will definitely start to actually sell the shares because I make things very simple. As I mentioned before, I actually keep things simple. If they actually cut their dividend, it could be they are doing expansion, they want to use the money for other things, but it also involve higher risk. By right, most of the good counters, as you see just now, I give example like DBS or counters that actually have increasing dividend, correct? They are good counters. So if the counter is good, correct, usually they won't cut on dividend. In fact, they will increase in dividend. No doubt there are special cases where the dividends start to actually drop, but due to certain other reason and the company have good fundamentals. But I rather not take the risk. I would rather just cut it and find other counters that go increasing dividend. For instance, you tell me you have this counter that happen like this. Then I will just switch this counter, maybe to Sheng or maybe I will switch to DBS Bank. I have other counter to choose. I no need to take the risk. The moment I see a dividend, as I said, a dividend tell 1,000 word. I don't know what's the reason. It tells 1,000 word. The word is sell. And also it means that the company itself, correct, is going to give less dividend. There must be some reason. And dividend itself, when they give less, correct, another thing you have to take note is that some funds or some people actually expect this certain amount of dividend. And when they see the dividend drop, just like myself, I will sell the shares. So when the shares are sold, correct, it means more shares are flooded in the market. So when more shares are flooded in the market, then what will happen is the share price will fall, just like basic economic principle, demand and supply. When more shares are flooded in the market, now the reason is due to dividend fall, then basically the share price will also tend to fall. So I think it's a correct move. There are cases that it didn't fall, it may go up. That is besides the point. But I'm just keeping my methodology simple, basing on the logic and why I think you may fall. Then I just cut it and I switch to a counter that dividend is increasing, more stable, and I believe I'll feel better. And always remember when you invest in shares, there must be no love loss, meaning that you love this counter so much. Yeah, you have this belief that the dividend drop, the fundamental is good, I just keep. Like example, some people believe in StarHub. StarHub, okay lah, still okay. But it drop. By the time you realize that it dropped a lot already, and then you realize the fundamental really changed a bit already, you already missed the cut off. What you rather make the mistake cutting it correct than to actually realize that this is a very big mistake. And when the thing really fall until you realize the big mistake is already too late. Can? So these are things that you take note. So what I said makes sense already, right? Now the second thing, why Hollywood share price drop although the REIT sector is performing well recently. Hollywood, let me explain to you. IPO strategy, that's why maybe you have to learn on the course. So now I'm just sharing some of the insight from it. Hollywood itself, IPO, whether it do well or not, the important part is you have to see who they place the shares to. We know LHN, correct? They are more the Chinese Tauke, the big boss, basically have a lot of fans. There is a possibility he could have placed to his kakis, his friends, his Chinese business friends, and basically all these people are not the people who will hold for the company. They will say, hey, Peng Yu, give me some of the shares. I want the shares. Give me lah, you wei sui lah. So you as a fan, you give them. So you place that at 60 cents. But these people tend to actually not hold the shares. And the moment they got IPO, they will dump. And if fall below the IPO, they will cut loss very fast. So when all these people who have the placement cut loss or they sell or they are very short term and they didn't place to people who are more for the long term, the share price will fall. So it's not, as I said, you don't look at the sector. You have to look very closely the placement table, and then you, if you possible, you get the information. Who did they place to? Did they place to Aka Amal, or did they place to the funds? Just like Centurion, they place to the strong funds, they place to people, and also the people involved basically are former Remisier King in UOB. You know that they will support the share price. You see they got buy the share price. So basically the share price will be better. But for Collywood, what is the problem? The problem is the moment it fall below the IPO price, it didn't manage support. As I mentioned to you all, the share price also, just like dividend, also tell 1,000 word. If it cannot hold, means the supply is more than the demand. Why is the supply more than demand? For IPO can only mean one thing. The placement is horrible. But will you be able to find out? Yes, then that's why you need to learn from the course how actually they actually plays out and then study. Then you keep. For me, very straightforward. When I do the IPO strategy, basically is I set opening. I believe it will open above water. Whether to keep or not is another question. But at least I will make money. So far, my IPO is most of the time, not most of the time, in fact, all is only win that I apply. I can sell opening at a high price that I do. Okay, Ken? So these are the things. So I continue with my IPO again. Ken, any more questions? Feel free to ask. Okay, so the market environment cause heavy losses for investors who enter IPO without strategic timing. So as I said, if you don't know how to invest in IPO, then don't use this method, because in the first place, this method is not so simple. That's why I put in the center. It is a bit more complex. A simple method is actually a dividend strategy. So if you find it tough, correct, don't anyhow apply IPO. I'd rather you skip this whole IPO thing. Don't listen to other people, because there is a methodology to apply. Last time you got this famous guy called Mr. IPO, who is similar to myself. The methodology I believe should be the similar, who actually only win one, then he recommend and then put a lot of hot chili. But now he don't write it, so it's a pity. Can? So let me go to the next one. So we look at the case study in 2024, IPO market. So IPO market in 2024 is the lowest in over a decade. Okay, so what happened is, but the outlook is bright for 2025. So I just tell you all honestly, during 2024, I was very sad that the IPO market in Singapore was very, very bad. I told myself, I want to revive the market, because if the market don't revive, it means that all the retail investors in Singapore will die, because all of them actually get stuck with their shares. So I told myself, only with a vibrant SGX market, then we will be able to make the overall market good, economy also better, everybody can make money, and those people who actually got stuck in those shares, correct, will be able to get rid of their shares that they got stuck for many years. So one of the things that actually I did was, I actually is in the Revive the Market Committee. I actually engaged with SGX, MAS, SIAS, Society of Remisier, all this. We actually talk and give all the feedback. I told them, for the IPO, you might get quality listing. Number two, basically you want to make sure that those company is backed by the government. Sometimes, like if the government actually invest, you might get strong cornerstone investors. And the more important point that a lot of people don't know is that I told them, make sure your IPO is distribute more evenly to the retail investors. Every time I sure win IPO, assuming that it's Centurion, your balloting ratio for those small retail investor only 10% chance. So now they actually give more to the small retail investors, but the bigger one, they actually, like, you apply 100,000 shares, you get less. Last time you apply 1 million shares, you maybe can get 100 over thousand shares. So now they actually put more focus on the retail investor. So if with more retail investors participation, right, then if you get maybe 1, 2 lot, you may add on. And that is why our overall market become more vibrant. So I spend my effort trying to engage them, give them feedback, and one of the important aspect is the IPO. And because of that, now if you apply for IPO for the first few like Astra Bond or whether those Hollywood or whether is it Soon Hock, even Soon Hock I apply. But again, after that it fall below the IPO price. But I apply for the Soon Hock, correct? I managed to make from it. So that is the main reason. I sold at 63 cents. Okay, can? So for the SGX, correct, for the IPO, correct, we realize that if you have applied these four counters, like example SAMH, the Food Innovator Holdings, Artica Group, and Goodwill Entertainment, basically you will definitely not do well for the IPO. So what is the case study for the 2024 new IPO buy-in? We look at the IPO, correct? If you have entered those new IPO during the 2024 market downturn, you will definitely result in heavy losses for many investors. The market conditions were unfavorable, with low demands and poor company valuation impacting the IPO. This is a fact. So if you have invested, I can tell you easily you lost 50% or more. Just now the SAMH, you really will cry. Basically, within 1 week, it lost more than half. So please don't anyhow invest in IPO. If you don't know how to invest, don't invest. And not all the IPO can apply. If you apply all the IPO, tendency is there's a higher chance that you may lose because the good one you get a lot, the lousy one you get very little, and day you mati. So in a bearish IPO market like 2024 for the Singapore market, it's often safer to refrain from participation until market condition improve. You look at this IPO, this is a fact. As I said, the ASSAMH. The moment you get it right, you look at the share price, it dropped like 22 cents. I can remember I tell people don't apply because people don't believe me. You see, after that crash until don't know left how much. Within 1 week, don't lost more than half. Then you see now drop until 3 cents. So what is the more the story? If the IPO is you don't know how to apply, don't apply. And when if it's a lousy IPO, you get a lot. In fact, you can get all. So don't ever do stupid thing. And make sure that if you must know how to invest in IPO. If you don't know how to invest, this method is not suitable for you at all. So you see the 2025 IPO case studies, lump sum creation. If you apply, like I apply for lump sum creation, I remember I sold at 30 plus cents. I still make money, but I think I make few $100 again. Extra bond, every time based on past precedent, as I mentioned before, it open above one. I expect it to open at 102. So I apply for the Sing and the USD bond, and I know how to apply to make sure I sure get, and then I get a bid, I sell, and I make a few $100. So it's good for me to mark out. It's free money. And if you don't have a lot of money, you can apply one lot, you get one lot. You apply two lot, you get two lot. So basically, this IPO, correct, doesn't mean that you need a lot of money to do. If you are a student, basically you can only apply 1,000 share. Then apply 1,000 share. 1,000 share make $20 and it give you a stable dividend as well, better than the bank. Centurion accommodation rate, if you have gotten it, also you'll do well also. So as I mentioned already, only the good one I apply. The lousy one I don't apply. So these three I got apply, just to tell you all. And these three I make few hundred, few hundred, few hundred. I think Centurion I make quite decent. It's a huge amount of money. Centurion I think I make 600, 700 or 800. I forgot already. So can you imagine that for all these IPO, the moment I get it, I sell, I boom, I what? So is it a very easy method? Easy for me to talk, but in reality need to learn. So if you all don't know how to apply this method, don't try. If you try, basically you need another way to do it. I can teach you all if you all don't want to attend course, what are the ways that you can use it. So first we do a case study on luncheon creation. We look at it. It's a notable event. Then people very cautious. But then I saw they have cornerstone investors and then I see their support. And then I see the demand was great. So I applied. It went up. Then after that, I have clients who actually bought 100 or 1,000 shares at 30 cents, so at 60 cents. So they know what they are doing. So if you have done this IPO, you boom. So you can see actually I actually don't only teach course. Basically, I also have investing note. I have a paid subscription. Basically, I will tell people, you see the key point, all my method is I flip only. That means what is flip meaning that I buy, I sell immediately at opening. Then I tell them I buy at 25 cents, I sold at 30 over cent, and then I get it, and then I immediately must sell. So I already said the upside is hard to estimate. But I believe that there's support at the post listing, and I believe it will go up. So these are the things that I usually share in investing note. So for people who actually want to follow and see a group of us actually analyzing, then they will just do on the paid subscription on the investing node. So you see Lanchang creation at 25 cents, you go all the way up, then you see open up, then all the way you go to 60 over cent, almost close to 60 cent, not 60 cent. Then after that it come down. So if you have done this IPO, you boom, that's all. But I am honest again, I didn't boom on all this upside. I only boom on the opening. But I make enough few $100, I'm happy. Everybody who follow make few $100 is still money. Am I right to say that or not? Extra bond also give money on. All the extra bond, if you have applied, you will make about close to 1 to 2%, at least close to 2% for each one. So if you get maybe 9 lots, you will make 180. You get for 2 bonds, maybe you make 200 to $300. So for extra bond, it's a free money. The moment you see extra bond, it is by the Temasek side. That time, Ho Ching wanted retail investors to actually be able to have good bonds. So a lot of people actually buy this extra bond and do well. It's safe, it's stable. Is it guaranteed? It's not guaranteed by the government, but since it's started by the government, yeah, it is considered relatively safe. So always this counter will open with a premium. So even you don't need to attend my course, or you don't need to listen to the moment you see there's extra bond, what must you do? Apply. So you see again in this extra bond, I told people you apply, you can apply the Sing, you can apply the USD. And if you have applied it, what must you do? Just say opening, free money, flip. So at least I show you that I didn't talk something that happened. Actually, I have evidence. I prove you all go to the investing note. If you all see inside the thing correct, I did post inside the subscription, the paid subscription, all those that can apply, and I put it in advance. So actually, if you want to go and learn yourself, then you just attend the course. If not, is you can go and subscribe, or basically that I will teach you another alternative method to how to choose IPO, whether to apply or not. So Centurion accommodation, I can tell you that it was oversubscribed. It has very strong cornerstone investors. But one of the key thing I look at who is the backer. Basically, is one of the IPO king. Basically, is Han Seng Juan, and they all basically they when they know how to play the shares, they know how to support the shares, and actually I would know that it actually will open above water. So if you can see inside here, correct, under the Centurion accommodation REIT, basically I will look at it, I look at the IPO, I bought 88 cents, I think I sold at 98 cents, or 96 or 98. I remember I sold around there. Then after that, what happened is I will actually tell people I will subscribe, and then I can hold it if I want the dividend, because this one is a rare one. I feel that you go even higher than IPO, so this one I put subscribe and hold. But actually, to be honest, correct, I also flip it, because I just want to have a sure win, safe win. The moment I make money 10 cents, I got my 7 lots, I make $700. It's good enough for me. The minus brokerage, I still make 600 plus. So that is the reason why IPO method is also a good method. So there is a way that you can apply. You can look at the balloting ratio. The ratio is like 1,000 to 4,009. There is, you know, it's 35 is to 50. 35 is to 50 in terms of ratio is basically 7 is to 10. 7 is to 10 means that if you apply, you do this IPO, you have a 70% chance of getting. That means out of every 10 people, 7% will get it. As I mentioned already, I have actually feedback to SGX and also to the relevant agency to do IPO. Don't every time people got 1 million, then you give them all the 100 1,000 share. That's why you see all the small one, you apply 1,000, you get 1,000. So we see this IPO method, whether the people who have no money to apply will make money or. Assuming you only have $880, you apply 1,000 shares, you get it. Open at 96 or 98, around there. Even you sell at 96 cents, you basically make 8 cents. 8 cents, you minus away the brokerage or what, basically you make how much? You easily make at least $60. Assuming that you are able to transfer the shares maybe to those cheap brokerage account, you have made close to almost 70 to 100 plus, because at the end of the day, the share price went up. So you can see that there are ways to actually ballot. So if you attend course, is basically to learn how to apply, how to maximize, how to get the best quantity, and then what are the chances and everything. So you can see, I don't lie. You see, like this one, I sold at 98 cents. See, really, I sold at 98 cents, and I sold, example, like 3,000 shares, so partial of it. So that's why I'm trying to tell you that there are ways to actually apply for this Centurion thing. And if I want to apply, I want to get more, how do I do about it? What should I do? So all this will be shared. So I explained to you all the balloting table and everything, what are the number of IPO application, how do you apply. So we need to learn basically on how to maximize, how to make money for IPO. As I mentioned, this is not to actually hard sell you all the course or anything, but basically I just saying that it's very, very straightforward that you can actually make from the dividend strategy. You can also make from the IPO itself. But for IPO, it's more complex because it's harder. You need to know more factors before you apply. And how do you get more quantity? You also need to know the technique. And that is the reason you need to attend courses if you want to. If not, a very simple strategy, I use what product and services, the dividend increase, I buy into the shares, I should be able to make it. Now, let me give you all a bonus. Assuming that you all feel that yeah, I don't want to attend course, basically, I want to apply IPO. Do you have a method that I can actually tell you all that you all can try? Yes, it is not 100% method, but one of the method I will tell people is look at the social media. If there is a lot of write up and then they say about the counter, it look good. By social media itself, if everybody's talk about it, basically it should be a popular and good IPO. It should open above water. If you have very few write up, basically you just skip the IPO. So I am not saying that there are no other ways to choose which IPO to apply, but such method has its good and bad. Social media, sometimes you get the wrong information, you get somebody who picked the wrong call, you may still lose money. But usually, social media itself, if you have a lot of people commenting on it, it should be a okay IPO. And if you apply it, you should make money because if there is positive social media buzz, you will increase the IPO demand. You will drive up the share price. Am I right to say that or not? If every blogger write positively and they are very accurate, the share price will go up. Again, if everybody write very negative, like NTDCV, including myself, I condemn the shares. Basically, I say that it's high concentration risk, foreign REIT doesn't do well in Singapore. You read all this, then basically you should not apply for NTDCV. No doubt, you actually open above water, but after you open 102, you close at $1. As good as you don't make money. So the real-time update and peer discussion, you go to share investors, you go to investing node, you go to share junction, you can re-engage the market interest also. But these are not accurate method, but at least it's free. So at least I'm not those who trying to shy with you all, basically telling you all that everything you need to pay to learn. You can use free method, but free method has its disadvantage, but I think it can be good enough for people who wants to actually participate using the IPO method. So for the core principle, let me give a recap. You must invest in confidence. You only invest those company after you read with good fundamentals, and then you need to know what are the other factors which I think I didn't share totally everything with you all. You need to look at the social media, whether is it popular or not to actually apply. You need to adapt to the market conditions. If the market condition is no good, like recently, the market suddenly tumble, like US, then you feel all the shares also start to drop. Then Hollywood list, then obviously you may feel that, hey, sentiment not so good, so Hollywood cannot apply. Can also do that. True enough, because the market sentiment was not good, Hollywood opened also very weak at 61 half. No doubt I forgot it's 9,000 share or 7,000 share at 61 half I make, but at the end of the day I make very little because the condition was no good. And for IPO, if it's a bad IPO, I will just avoid. And we need to practice the patient and strategy, meaning that we need to be patient and strategic with the IPO investor. So it's not every IPO must apply. Like NTDCV, I won't apply. If it's a very lousy IPO, I will just skip it. It doesn't mean that all the IPO I must apply. Okay, so these are the key gist on IPO investing. Can? If you all have any question, let me see first. No question, correct? Let me see got question. Let me see. Let me see any question first. Okay, so there is no question, correct? Then now let me go to the next one that I want to teach you all, and that is the right strategy, which a lot of people like to learn. I am known as the rights king. I always make on the rights, and I have winning formula for the rights. And this is one of the more important thing that can make tens of thousands, few hundred thousand just on the right strategy. So let me teach you all now. So right trading strategy, correct? Basically, it is the underlying principle is no investor plan to lose money when investing. So what is a rights? That means the company actually give you chance to actually participate in the project where the company is trying to raise money. They are trying to sell shares at a discount. Just like during COVID, SIA itself need money. They sold their rights itself at $3, example. Or example, SATS, they want to expand. They went to buy up another, they small fish want to eat big fish, went to buy up some another big catering in Europe. Okay, so basically they need money, so they raise on right issue. But again, we have Temasek all this backing it. When they actually pump in good money to subscribe for it, we always believe one thing: all of us are not idiots. Meaning that people who throw in big money into a certain company, most of the time they believe in the company fundamental, and usually they believe they can make money by buying the shares at a discount. But there are some rights we cannot just apply blindly just because people throw in. This rights itself is that the people who pump in are not majority shareholder but control the company because they're major stake. So by pumping in the money, correct, some of them actually use the extra money that they pump in together with other shareholder money to buy rubbish, to churn out the assets out of the company. So we have to be very careful. So what are the dodgy people that use such method, correct? That even though there's a right issue, they churn in new money inside, but at the same time, correct, they actually use it to buy their interlinked assets at the cheap, like Sojiwan from Malaysia that time. So these are actually dodgy people. So if a company fundamental remains strong after a right issue, the share price will tend to rise in the long run. So during the right issuance, correct, the share price is usually at the lowest. It is often at a discount. So I'm going to teach you all certain principle that it works. Like example, you go and check my YouTube video, correct? I actually share on SIA and certain things you all can find on in the past. Okay, so from the right issue, we can actually see how we actually can invest. So this is the gist. Because today you have to learn some basic that I'm going to teach you all, and you all think about it, you all will regret that actually you all don't know about it. So we need to research the right issue, we need to assess the market condition, we need to participate level, and then we need to monitor the execution strategy. So I give example. A lot of people, example, own SIA. Last time SIA doing own $10 plus. So during COVID, the whole share price plunged to $3. $3 plus, sorry, $3 plus. And during the rise. So if you have the share, example, you have 10,000 shares, just because you buy at $10, you got stuck in the IPO. A lot of people say, I cannot cut loss. Don't ask me to cut loss. Don't ask me to sell at $3.80 or what, or 3.57. But I will tell my clients or people who learn from my course, or I'm not teaching you some basic, I will ask them to sell the SIA at 3.57 and buy the rights at maybe at 45 cents, which is that time happened like that. So if you sell at 3.57, you buy the rights at 45 cents, you top up at $3, you basically is selling at 3.57, buy at 3.45, you make 12 cents. 12 cents times 10,000 is basically $1,200. But if you don't know about it, basically you will not be able to forfeit. Another mistake about this right issue is a lot of people say that, now SIA got right issue. They give me right, I got no money to top up. I got the mother share, I just sell the rights, I got no money to top up. Again, you should just sell the mother, and then you should just top up the rights if you don't have money. You should never go and sell the rights away. I give you example again. If you sell the rights, you get back 45 cents. Am I right to say that or not? 10,000 shares. But if you sell the mother, you are getting back like 3.57. Even you top up the $3 at 3.45, you get back extra 1,200. So a lot of people make the mistake is when they don't have money, they basically sell the mother. By right, no, they basically sell the rights. By right, you should sell the mother and top up the rights. I'm just teaching the basic only because it's very complex, this whole strategy. But if you think back, a lot of people have understand about rights, right, will have make money from rights instead. So even when your company that you have, like example, SATS, I think some of you have SATS, your bond maybe by 4 plus. So the time when they issue rights, it dropped to 240 something. Then the rights, if I remember, it was traded at maybe 20 cents. So even you sell at 243, you buy back at 20 cents, you will make a difference of 3 cents. But if you just sell the rights, you basically sell at 40 cents. So these are things that sell at 20 cents, sorry. So basically, these are things that I will explain more in depth if you all want to understand. So even just on this Costco right issue, so Costco actually offer right issue. Am I right to say that or not? So there are a lot of people who actually has Costco, or for me, I don't even own Costco. So I will have purposely buy Costco some shares at CR, then I apply for access. So I applied access because I saw that the parent company is going to subscribe to all the rights. I believe it well supported, and I believe it will be above 1 to 2. And true enough, I actually do the right issue. I actually apply for 1 million share, and my call is 122,000. But basically, I sold for 125,000. So I make 3,000. But the thing is, I got another client who has Costco rights. I said that I actually apply 1 million access. I didn't expect her to also go and apply 1 million access. So basically, she also make 3,000. So sometimes if you understand how it works and why I dare to apply 1 million shares, then you have make money from rights. So rights has a lot of ways to play. You can actually make from the arbitrage, you can actually make from the excess. So it's a very complicated. So for Costco itself, I actually make money from it. And one of the key reasons, as I explained already, nobody throw good money to lose money. Right. So basically the parent company itself actually apply for the rights. So what happened is, if they are going to apply for the rights, right? So we know that they will support the share price. So anything around 122, you apply, you should open above water. So that's what is the basis. So now we actually do a summary of today's talk. Is basically, we know that IPO offer opportunity for early investment in growing companies, but require knowing when to apply or skip to avoid losses. We know that dividend provides steady income and indicate a company health. And then we monitoring the trends helps identify reliable stocks. And then we also know that the rights trading also allow investors to buy share at a discount during a right issue, but we need to know special timing. And usually right issue is usually where you buy the shares, correct? You are buying at a discount. So this I will actually explain in depth if you all want to attend the course. Mastering these investment tools actually help to build a diversified portfolio and manage risk effectively. Be informed and empower investors to seize market opportunity, avoid common pitfall. So I am just explaining to you all that dividends and corporate action strategies like such, right, actually do work. As I mentioned already, you all listen to what I said, you all do a back test, and you all evaluate. Even just what I actually go through with you all, I believe that you all will benefit and actually learn how to invest and actually do well. Actually, investing is not so complex one. You need to learn until so deep in the fundamental, because dividend itself actually explain fundamental. If the dividends start to increase, it means the fundamental is good. But I back up with using your own product and services, whether you use it to back up with the dividend strategy. For the IPO strategy, it is more complex. But then if you don't find it easy, if you don't learn from the course, then maybe you can go through social media. For rights itself, I just explained the basic. But for the complex one, there are many ways that you can make money from it, like arbitrage, applying for access, how do you make money from it, all the things, and then how do you analyze the company announcement, all this, it can be done. But it is more for people who want to make more money, want to learn something that is more complex and complicated, but at the same time, you want more rewarding methods. So you can also complement with other things that you have learned, such as fundamental analysis and technical analysis. So what is the final summary for this, correct? Is basically you basically need to understand that you can try new investment methods to enhance your decision making and potentially increase your return, like my method. But whether you find it good or not, as I mentioned before, it really depends on oneself. Just like those martial art 武林秘籍, basically, the same skill that different people learn actually yield different result because they understand differently. I spend so much time, I can teach, but I believe that by my simple methodology, just on the dividend strategy today, you all learn, correct, should be good enough and safe enough for you all to actually do well in shares. But if you have learned other methods, correct, such as dividend, no, technical analysis or fundamental analysis, then you all just add on. So if you have any questions, feel free to ask. So I'm open to more questions from you all so that you all can learn and everything. I will stop share and wait for your questions. Is there any questions? Let me see. Is right issue same as warrant issues? No. So usually the rights with warrant, correct, actually is good. So right issue is give you the obligation to subscribe to the company shares. So for warrant itself, correct, you have a certain expiry. Right issue basically is very short. It's only within the 1 to 2 weeks. basically it's either you take up, top up, become the mother, or you totally don't take it. So for example, like Yang Zijiang Financial Maritime spin-off, correct? I explained to you this corporate action. This is even more complicated. So usually, if a company itself, correct, is trying to actually spin off a counter, correct? Usually during that time, I will have bought into Yang Zijiang Shipping. So when Yang Zijiang Shipping, correct, they spin off Yang Zijiang Finance Holding. You ask yourself, whenever you do any spin-off, it involve a lot of money. You have to go and do a lot of things, like you have to pay to do it. This corporate action is not free. You have to get the bankers, you have to get the lawyers, you have to get the auditors, and you have to spend so much money. So the person behind it doing it, correct, believe they can unlock the value of the company. If they don't think that they can unlock the value of the company and become richer or make everyone benefit, they won't do it. Just like when Yang Zijiang spin off to become Yang Zijiang Shipping and Finance Holding, correct? I remember the Yang Zijiang Finance Holding was about maybe 60 cents, and then the Yang Zijiang Shipping was maybe like 80 cents or something like that. So they combine together equals the mother share price. But when they spin off, it makes the Yang Zijiang Shipping, correct, as a pure shipbuilding play. At first, all the funds do not want to buy into Yang Zijiang Shipping because it is a finance company plus a shipping place. So if a fund want to buy a pure shipping company, they will not want to buy into Yang Zijiang Shipping. So from then at 80 over cents, Yang Zijiang Shipping went up to $3 plus. While you see when they unlock the value, Yang Zijiang Finance Holding, because you know China got issue, the share price keep melting. But after that, what happened is when China start to recover recently, Yang Zijiang Finance Holding went back up to $1 plus, and Yang Zijiang Finance Holdings then start to spin off Maritime. So whenever spin off, correct, by right, it is supposed to unlock the value. So by right, we use this example. Yang Zijiang CR, Yang Zijiang Finance Holding CR at 106. When they spin off, am I right to say that the placement of Yang Zijiang Maritime is 60 cents? So the mother share of Yang Zijiang Finance Holding is 46 cents. So if you are supposed to split out the two counter, Yang Zijiang Finance Holding will be at 46 cents and the Maritime is at 60 cents. If the spin-off is a success, by right, basically from after the spin-off, even before Yang Zijiang Maritime list, basically Yang Zijiang Finance, no, Yang Zijiang Finance Holding should go up. So it opened week first because some people don't know what it is. 46 cents, it dropped to 44 half, but from 44 half, it went back up to 50 over cents. So usually, as I mentioned already, for corporate actions or rights, nobody throw money to lose, especially for company. They must be confident that they are able to unlock the value of the company, then they do it. So if you want to learn about how to do on the Yang Zijiang Finance Holding, theoretically is during the CR, you should buy into Yang Zijiang Finance Holding on the last day, and then it closed at 106. So now you have gotten a Yang Zijiang Finance Holding, and you have gotten a Yang Zijiang Maritime at 60 cents. So given that now Yang Zijiang Finance Holding go up, then you assume that Maritime got 60 cents, so you are better off. That's how you play this counter like this on this corporate action. Can you understand what I'm trying to say, Eddie? So corporate action, as I mentioned, people spin off is to unlock value. If they don't believe can unlock value, why waste so much time, effort to wayang? So when they unlock the value, the combined value of the new Yang Zijiang Finance Holding and Maritime should be higher than the CR eventually. That is how it works. Yes, feel free to ask any questions so far. Any questions you all want to ask can ask. Anyone, please? Any question that you all want to ask can feel free to ask. I will be quite happy to actually teach you all this. If you all find anything that you all don't understand or you all actually face any investment thing that happened to you all and you all didn't do well, like suddenly this is not even in the dividend or right issue, like just now they asked about Yang Zijiang Finance Holdings, Beyond Maritime, how it works. I can also explain because it's part of corporate action, but I never teach that because it is more complex, and then to understand this correct, there are not many scenarios because we don't see a lot of spin-off. The last spin-off that I see, correct example that is easy to say is the Yang Zijiang Finance Holding from Yang Zijiang Shipping. Can any more question? Let me see what question it is. Why Centurion price keep dropping after its spin-off? Okay, so this is a very good question that I always teach. Centurion, LHN, and a lot of things, correct? the price always keep dropping after it spin off is because of the fact that sell on news. So a lot of people actually pump up Centurion or they buy because it's an expectation that if the IPO list, the company will do well. So LHN will continue to go higher, Centurion will go higher. It is not about that. Let me explain to you again. Usually insider like us, if I know the company is going to list and I believe that the demand is good, the thing, I always buy in advance. So we always buy on rumors. So when the price keep going higher and higher, this insider already confirmed. When the retail investors like you all start to see the thing, oh, it's going to confirm. I just give you another example, like UMS. USS gives bonus issue. Am I right to say that or not? So during the time where they are going to give this bonus issue, UMS share price just keep going higher and higher and higher and higher. So today UMS go up is because once the bonus issue is out, the insider who actually bought the shares or their kakis that they know it, they will start to offload. But poor retail investors always look at news. Oh yeah, they're going to give bonus issue. Bonus issue is very good. This is another type of corporate action. Then what happens is they go and buy into the shares. Ayo, they are always the last. So the insider dare to throw the share out because they know a lot of people look at the bonus issue. They will keep buying. So as the price keep falling, you say, hey, how come the price keep falling? Because buy on rumors, sell on news. Same thing as Centurion. You don't believe the moment you go and check the chart, the moment Centurion release, Centurion price start to fall. You go and buy at 168, you overcut. So usually we always buy when it is on the early stage. By the time it's at the late stage, you are already the late bird. We always say early bird eat the worm, late bird eat the latest. So basically we cannot be the late bird. So retail investor every time don't make money or get burned is because they are the late bird. They always follow the news that's announced on the internet from the newspaper or the forum. You always people who make money is in advance. So that is how you actually make. And that's why I like to do right issue because before the share price go up, I will make it. So now you understand it. So the moral of the story for Centurion is insider buy first. They buy on rumors, sell on news. When the thing is concrete, they sell. You look at the news, Centurion is going to release. They are going to do well. You go and buy. Come down, buy. Come down, buy. They offload to you. So it become a joke. Just like recently, CMC, gold price keep going higher, you don't believe. So when you see gold price at the highest, you go and buy, they start to offload to you. So it keep going higher, they keep offloading. So I have people who actually bought CMC at 186. The share price go another 5-10%. The share, in fact, went to Bali, went to 128. Again, insider always do opposite one. That is why share is not so simple to play. If it's so simple, I wouldn't just teach you all on the dividend strategy. In fact, you all should just learn how to trade. Simply just use the dividend strategy. Ken, this is a very good question, and I like the question. And I actually teach the inside of shares, buy on rumor, sell on news, and why it work. And when the insider keeps selling, I forgot to tell you, means supply increase. Supply increase means the share price fall. You retail investors all cannot hold one. The moment you buy, some of you play contra, basically, you all eventually will cut. So the price just keep falling. So now there's another question asking, I'm a bit confused about the rights. So right issue is when a company like SIA, I make it very simple. They suddenly got COVID, they need to raise money. So they say that I'm going to issue extra share. For instance, maybe 1-for-1. So they say that one SIA share will issue one rights at maybe at $3. Meaning that if you have the right issue, it will be traded and you are given these rights to actually subscribe to make it into the mother share. So usually when the rights that is given is traded, it's free. If it's a tradable rights, you have the rights, number one, to exercise it, top up at $3 to become the SIA share, or you have the chance to actually sell it. I give you one very classic example. Assuming that the mother share price, we make it very simple, is at $3.60. The rights will be traded, example, at 50 cents. Why is it not traded at the same price as the mother, like 60 cents? You top up $3, it becomes 360. It's because if that is the case, I'd rather buy the mother. Why would I want to go and top up, go and buy at 60 cents, top up $3 where I immediately can buy anytime it move up and down, I can sell. So rights has to trade at a discount. And when rights itself trade at a discount, why is it that the moment you see the rights trade right, every time the share price come down, is because people like me, knowledgeable, will sell the mother, buy the R. If people keep dumping on the mother, we know there are more supply, obviously the share price will fall. But that is where we see an opportunity because this share price drop is not because of the fundamental that it dropped. It's because of the right issue. You get what I'm trying to say? Because of the rights, there's arbitrage. People sell the mother, buy the R. That is why they keep selling, the price keep falling. So if fall to a point, like example, SATS dropped to 240 something, I think SIA dropped to 3 plus, you buy, it all rebound. Look at SATS now is 350. You look at SIA, it went back to $6 plus. Immediately when the rights came back, I still remember I sold my rights for SIA at $4.30. If you want to know more, you can Google about myself and search for Li Guang Sheng and look for SIA right issue. I still believe I'm on the YouTube for the investing note. I actually explained in depth that time what should you do if you have SIA rights and how to do the arbitrage. Can? Now the next question that I see is, why do company do share buyback and can they time the buyback? Now let me explain to you all. This is a very good question as well. So I always do a lot of disco share buyback. So a lot of disco share buyback, a lot of people make this misconception. Your question is damn good. They think that if the company buy back the share means the share price will go up. This is pure nonsense. Why is this pure nonsense? Because all the time when I do company share buyback, most of the time the company just use the company money to buy back the share. The price is fact fall. So share buyback is not a good. A share buyback must be together with insider buying back the shares because of the fact that if you are the company insider, if you believe in the company, you won't use your company money to buy back the shares. In fact, you will use what to buy back the shares? You will use your own money to buy back the shares because you believe it undervalue. So usually when companies actually buy back the shares using the company, meaning that they don't know what to do with the money in the company. They don't know if they invest or expand with the money, correct? Usually, a good company will use their company money to buy business, expand, to do. But if they use the company money to buy back the shares, basically, they scared the share price keep falling. Or this major shareholder don't even use his own money because he pledged a lot of margin. So he wanted to use the company money to support the share price. So this is a big no-no. You get what I'm trying to say already or not? So we do not want to just see the company buy back the share and then we buy. Usually, when they buy back the shares, it means that the company itself has issue. What are the two main issues? The first issue is the major shareholder itself can control the company. The share price keep dropping. They themselves got no money. They have a lot of margin call. They need to use the company money to buy back the shares. So if you see company share buyback data, so that's why I always share that when I see my company do share buyback, the price usually fall. Long run. They must do share buyback together with insider buying or substantial shareholder buying. Then I can tell you that the share price will go up. Now you understand? So this is something I share with you all the insight. And for share buyback, it has to be cannot be more than 5% of the last 5 working days of trading so that there's no manipulation. So whenever we do a share buyback for the company, correct, we have to immediately by next day morning 9 o'clock, the company secretary and myself need to report to SGS what is the price we buy, and we must make sure that the price we buy is not more than 5% of the past 5 days average. So these are the things that you take note. And if the company only 1,000 share, 3,000 share just to show that they do share buyback, this is not a share buyback. This is just to show wayang support that they are actually buying back the shares. And they will hope that retail investors come and support. So you ask me this question, you every time get burned because of the fact that you see share buyback, you buy, and then you get burned. That's why I say your question is a good question. You don't understand the methodology behind share buyback. Share buyback basically, if let's make it the company is good, the share buyback basically when they build all this what we call treasury shares is meant to actually give as employee share option scheme for the shareholders. Can understand on this case. So one example of the share buyback was Yang Zijiang Finance Holding. Earlier stage, you keep doing share buyback, the price keep dropping. It doesn't make any logical sense. They want to support the share price, but if let's make it they are doing so well, they should be using the money to do business, not buy back their shares. Understand the logic, Edie? Okay? So now, the next question is, but one can only sell after X right? Sell after X right. Only when there's X right, you have the right. So usually, we try not to have the rights. That means we try not to have the share X right. Maybe I just keep only 100 shares so that I can do access or what. Usually, if there is a right issue, why the share price drop before at CR is because of the fact that for people like me, expert, we know that during the rights trading, the mother share will drop. So, example, if I saw the moment SIA going to issue right, I will have sold SIA at 430. Or maybe when they just announced $5. I wouldn't wait until it dropped until last day $3.50 over cents, then I go and sell. I become the biggest goon. So obviously, when you have right issue, what you need to learn about the right issue is the underlying basis is you must sell the shares correct before the CR. That means once the XR basically has more room to fall. Can so if it's XR, what should you do? You can only sell during the XR, yes, but it's really too late because you got the mother and the rights. As I mentioned already, your first mistake already, you ask, I can only sell after X, right? So you're going to sell the rights, right? Answer is, I already said, you should sell the what? The mother share. Because since you already have the mother and the rights, you have to sell the mother. So when you make the second mistake, if you ask this question, is most likely when you don't have the money to top up or you don't like to top up, or people who usually have this right, they will actually, what will they do? They will actually sell the rights. So this is a mistake. So the next question is, please explain about warrants. So basically, warrants is traded with a premium. There's a Bradesco's model is people tend to actually buy warrant because they can buy more. So if let's make it for the certain mother share, there's a time value of money. So when it reach maturity, correct, usually you will start to become zero if there is no premium. That means that it's not trading above the water. So warrant itself, correct, is like I do not want to go and buy so little quantity. I want to buy a lot of quantity. So usually why warrant has higher risk is that you can buy more. So you can sell the model, like example, DBS model, you can buy maybe few 100,000 shares of, or instead of 1,000, you can buy 100,000 of the warrant. So you tend to make more. But the risk is, as if the share price don't go up, every day there is a decay. Decay means that the price will start to erode. So warrant itself is high risk, high return. Basically, you are paying like a premium to actually hold the warrants. But people like to play warrants because they can bet bigger. So if assuming that you bet correctly like DBS, assuming you buy one DBS 1,000 share and you buy 100,000 share of the warrant, basically if DBS go up so much like last past few days so hyong, you buy the warrant, you make more. Same thing. If you buy the warrants and it crash, right, you die even worse. So warrant itself, when it maturity, you hold, it may become zero. But if you buy the mother share, it may not become zero. So buying the mother share usually tend to be safer. So I would not advise to actually trade warrants unless you know how to trade warrants. But I do trade warrants. I know how it works. But basically, warrants are not meant to hold. If you hold the warrants correct and the price keeps sliding correct, you are actually taking a very high risk that eventually you will become kosong. That's why warrants are not meant for holding because there's a time decay. Okay, so that next question is, but Keppel and Guang are doing share buyback too. So Keppel is doing share buyback too. You also have to see whether the funds are also buying the counters. So if let's make it they are doing share buyback and let's make it the substantial shareholders, because you don't anytime see it's not like the main owners. You have to see whether the funds are buying and everything. So if Keppel and other good companies together with the insiders are buying it, especially the funds. So a very, very good simple example, you are talking about the good companies doing share buyback. How do you know whether share price go up? You just go to the SGX institution trade every week they will publish. You see whether Keppel is in the top volume of no the top list of the counters that the institution are buying. So if Keppel is doing share buyback and institution is also buying the shares, I can tell you the share price go up. Just like OCBC. OCBC, what happened is also doing share buyback, right? Yeah, I just saw last week the latest report this morning. Somebody asked me, I went to see the SGS institution. OCBC is the number one buyback last week by institution. So if you see OCBC, the company doing share buyback, you see institution buying, it's just like insider buying or substantial shareholder buying, please buy into the counter. That's all. But if you just see solely the company is just doing share buyback, it is not a good answer to say that it can buy. Usually it may not end up one. So you must understand that share buyback alone it is not a good indicator to see whether a company can buy or not. In fact, it may more or less based on I do so much share buyback for companies, it may come down. Okay, let me see what's the next question. Does warrant dilute the share price like share right issue? Depends. If it's a company warrant, you exercise the company warrant, you'll be converted into the mother share. Yes, it will dilute the shares. But usually, If it's a company warrant, then you will dilute. It's similar to right issue then, but it's a longer term, and then you got the time decay, so it's more complex. So warrant do dilute if provided it is by the company. If it's those all those issue by Macquarie, all those no. Can next one. Does the is warrant the same as options? You can say it has similar structure and everything. You need the best close model, all this. Yes, you can say it has some similarity, but it's more complex. But today I'm not covering much on the warrant because warrant itself is a more risky and complex instrument, and I give you the basic understanding will do. How to check it, how to check the institution by you go to SGX, you go to data report, you basically can find it. Basically, yeah. If let's make it that you want to know more about it, maybe next week I'll be conducting a physical webinar. You can also come down on the spots there. I can explain and actually through the computer I can show you all where are the website and all the link. Like this Zoom itself, I just give you all the brief understanding. Can? Any more question? If there's no question, correct, I hand over back to Andy to do the closing. Andy, you there?
Yes, thank you. Guang can see me?
Yes, do you have
Okay,
the
can
slide
see me
or
and
you
hear
need
me,
me
yeah?
to do the
Sorry.
slide?
Okay, thank you very much for those who stay on. Yes, indeed, what Guang just mentioned to all is valid. Now, I think those who have been stay in the screen, right, I think we have a very fortunate to have Guang to thank you for those who raised the question. Now, I think we are very fortunate to have Guang as you can see the slide right now, who are basically take his precious time. Now, I think earlier on in the opening speech was shared with all you here. As you can see, the almost an hour and 30 minutes, I think closing to about 2 hours time. We start from 7 o'clock right now, already 8:55, 5 more minutes to 9 p.m. Now, indeed, Guang really is a very knowledgeable individual as what he will share with you. Therefore, you can get a title as a principal investment specialist within Philip Security itself, right? And in terms of that, the knowledge that he have is very, very valuable. Now, again, like today, I think we all knew today is fall on the 11th of the November. We call it like 4/11, right? Okay. You can buy 4D if you want to. Okay, anyway. No, just took aside. Now again, for today's special, right? For today's special only, as you can see on the slide, actually our cost actually we are pricing about 555. But again, today because of this 11th of November, and therefore we are giving 11% off the cost fee before GST. So after the GST, as you can see, the price has been shared. Right, so you are only paying, as you can see on the screen right now, is with the 9% GST is only 545. So this is the time for all of you here to take charge, like what Guang say, you take charge. But more importantly, also at the same time you are learning the skill set, right? Because once you learn the skill set, it will not go away, it will be stick on to you, right? Now I'm still very during the time of, I mean, remember I just shared with all you here during the opening speech, Guang in fact he ever teach provide a work together with Cybercode on this corporate action trading course somewhere around about 7 8 years back. I still remember that time we run it physical session. So we have student in fact attend the course the next day, very next day, he already make back. In fact, if I'm wrong, he do the preview. Yeah, if correct me I'm wrong, I think Guangsen, when he do the preview and this guy going to buy the IPO stock. And then when he come for the course, he will share with in front of everyone. He say, Guangsen, I have good news to share with you here, to share with all with the student because they do a FDF right that time. He already make back the cost fee of the even before he joined for the course itself. So this is something that what it come from a horse's mouth from the student who are benefited, right? Because he went through the webinar and sorry, the seminar. That time we're still doing seminar because before COVID, right? So I still remember we conducted at our place at this Phillip Street. That's where our office is. He go through the seminar and then he go through the session. Even before he joined the class, he already earned back the course fee. Okay. Now again, as I say, those who are, let's say you find that if today you have a friends who miss out the session, unable to join the session, like I say, not to worry, because in fact, following week, which is next Tuesday, we have another round of the session. But of course, next week, another round of the session, we'll be doing into the physical. It's on the 18th of November, timing the same at 7 p.m. and around 8:30. That will be basically talking about the same thing, but of course, it will be face to face. It will be a physical session at this 17 Phillip Street. That's where our office is. Of course, the class itself will be going to conduct via the Zoom session. Okay, now what I can do right now, I think there are still a couple of you still in the room, right? So in fact, about how should I say, about 5 minutes back, I sent a link. Okay, let me, it will allow me. I just do my share, because of course you can see the screenshot right now show by Guang. This is the course date. We're going to schedule. In fact, it's about another 2.5 weeks from now. Right, today already on the 11th of November. So it'll be scheduled on the 29th November, Saturday, 9 a.m. to 4 p.m. It's through the so-called the Zoom session.